Welcome back. Wipro Q3 numbers are weaker than street expectations. The IT company has disappointed the street on its Q4 performance in terms of revenue and the next quarter's guidance. Now, here are the numbers. The company's top line has declined by 0.8% on a quarter-on-quarter basis. This is at the lower end of the company's guidance of -1% to +1% for the quarter. We know the reasons, right? There was macro uncertainty, as TCS pointed out. The decisions were being delayed. Some projects which they thought would have started, perhaps got paused. So towards the end of the quarter, when we spoke to the companies in January, things were fine. There were green shoots in discretionary spending, particularly in the banking sector. But things turned, the sentiment soured towards the end of the quarter. So from middle of March, we did see some impact of the macro uncertainty, and that perhaps has hurt Wipro. So Wipro's top line revenue has fallen by 0.8% on a quarter-on-quarter basis. Secondly, the Q1 guidance, that's the June quarter guidance, is also weaker than what the street would have liked. It's -3.5% to -1.5%. This is lower than expectations. Remember, we did highlight that while consensus expectations were, say, -1% to +1% or -1.5% to 0.5%, these estimates were set in the early part of April or towards the end of March. And things did, turn south after that. And therefore, the company's guidance may be worse than what the street was anticipating. And that's been the case. So -3.5% to -1.5% is the Q1 guidance, and that is disappointing. Where the company's done well is on two key accounts. One, margin defense. The company has held on to its margins at 17.5% for Q4, unchanged on a sequential basis, despite no growth in the top line, a decline in the top line. In fact, for the full year, the company has managed to grow its margins by 100 basis points. And secondly, the deal wins for the company have been strong. In fact, just in March, the company had announced a very large £500 million order win, so large deal wins under the new management of Srinivas Palya. So deal wins for the company are strong. The total TCV is inching towards $4 billion in the quarter. That's up sequentially and on a year-on-year basis. Even the large deal wins at $1.7 billion is up close to about 80% on a quarter-on-quarter basis. But I think the street would be disappointed by what is ahead. And forward-looking, we've got the Q1 guidance, and that's -3.5% to -1.5%. Sandeep Agarwal is now joining us. Sandeep, you were warning us that things are going to turn a bit ugly. The numbers are not going to look good. But for Wipro, give us your first take.
No, so, as expected, the numbers are a little weak than what was even estimated, as you rightly mentioned. So, but I think, the bigger challenge is the next quarter guidance, which is a sharp -3.5 to -1. That is something, much more worrisome. And as I was saying that, most of the companies are 70-80% business, which is consistent and annuity, but balance 20-30% you have to earn that, you have to win those deals during the year. And that will become questionable because that has large component of discretionary. And in such environment, expecting that clients will open up clearly will be a very tough task. So I think that is exactly what is reflecting in Wipro's interview. I think that, there will be uncertain times. And as I always maintain that in case of tariff, you have some answer that you can pass on some cost, you can take on some cost. But where, global economic growth is uncertain, how much it will fall, then obviously the customers will not spend what is not required or what is not immediate.
That seems to be playing out. We'll have to wait by for what the companies say on discretionary demand and tech budgets and projects. And are there any ramp downs or pauses that we're seeing? Prakash Diwan is also now joining in on the show. Prakash, what would the advice be now for shareholders holding Wipro shares?
So a couple of things that may sound contrarian, but the stock is anyways, reacted downwards since quite some time, along with all the other majors. And this was anticipated. It's just that the future looks starkly weak at -3.5 to this thing. Our expectation was it would probably be -1.5 to 0.5% in that band, but this seems to be widening. But if the recovery seems to be imminent post the June quarter, and that of course will be heard from in the commentary, then things could look different. The way the stock Rima went into earnings today, earlier in the day, in spite of all these tailwinds which are negative, there is an expectation that discretionary spend could probably make a comeback in the second half of FY26. So if that were the case, then it's offering some value and you could keep adding on dips. But otherwise, there's nothing spectacular about the earnings that you would want to kind of straight away start adding IT and Wipro within that.
Sandeep, same question to you. Do you think we're going to see EPS downgrades based on the Q1 guidance? What would be the top questions that you would have for the management? And what does one do in terms of holding large IT stocks now?
No, I think, the question which has to be asked to management is obviously what their clients are saying. But I can tell you, with my 2 decades of experience in such environment, even clients don't tell clearly. They themselves don't have clarity to tell to the management. And in turn, how will management guide you anything? So I think there will be uncertainty for at least one more quarter before there is any clarity which emerges. I am more worried, on the global GDP growth rate cuts, because we have seen in the past whenever the global GDP gets cut or the numbers get cut, the challenges that the uncertainty increases, it becomes very difficult to deliver for the companies. So generally, this situation is more tougher than anything else.
Okay, gentlemen, thank you very much for joining in. We'll have the management addressing the media via the press conference. We'll listen in closely for what their clients are telling us, what the corporate behavior and action is, and we'll keep getting you more and more updates. Well, we'll wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side.